Good afternoon, everyone. This is Christian with PerfectStockAlert.com, a 100% free service for smart investors and traders. All we ask in return, please refer a friend. Today is February the 12th, 2012, and every weekend I like to run a scan looking for value investment opportunities or something that comes on the radar that I should look into. And this weekend I want to bring your attention to Bank of New York Mellon Incorporated, ticker symbol is BK. Let me look at the tools here. Here's your ticker symbol right there. This is a 10-year monthly chart. Every one of these candlesticks represents a single month, and the total time spent is 10 years. I've drawn a line right here, and as of this video that I'm making now, the book value is marked at $27.63. It's right here. So you can see that we're trading well below that level, roughly 30%. That's a key number. If you've done any study of Warren Buffett's teacher, Benjamin Graham, he'll tell you that you don't want to start buying until you are 30% below the intrinsic value. And book value could be used as an intrinsic value. Of course, book value could also be overstated, so you need to look into that to determine that for yourself. However, it should also be noted this company, I'll show you in a moment, is profitable. It's making money, so they're discounting future earnings as well as being trading below, roughly 30% below book value. So it's definitely something that I would be looking at right now. We can see on this chart back here at the bottom of the start of 03, the low point there, the low point for the 2008 through 09 crash. You can see what that's at, and you can see where we land right now. So it's definitely something I would look at. Let's have a look at some of the fundamentals. Okay, I'm looking at Yahoo Finance page and looked up the ticker symbol, and I'm looking at the key statistics for this particular company. You can find these statistics almost anywhere, including your discount broker. You'll notice here that the market cap right there is $25 billion. It's a large cap stock, and you'll also notice here the enterprise value. It is a negative number. If you don't know what enterprise value is, there's a video that I uploaded yesterday on the free website at PerfectStockAlert.com. You can check that video out. It'll explain it. And right here you'll notice it's a negative number here, and that's actually a positive. It's not something that's actually negative for the company. It's telling you that there's more cash on hand than there is debt. Just watch that video if you don't understand what it is. I'm not going to get into it right now. I don't have a lot of time with these videos. Trailing PE ratio is at 10.55. I like anything at 15 or lower, so that's in line for me. Forward PE ratio is even better. However, forward PE ratios, that's going to be with projections and things like that, so it's not as trustworthy as the trailing PE ratio. Let's see what else we can look at here. Under profitability, right here, we can see that we have a profit margin of 17. I like that, 17%. Anything 12% or higher is something I want to look at. Operating margin is 28%, like that. You also notice the return on equity, it's 7.63%. It's not bad, but I prefer a little bit higher. That's actually a little bit below what I like to see, 12% or better, but that is still fair. Revenue, you have $14.7 billion. You can look into all the statistics here if you'd like to. Make sure I can get enough of that. All right. Diluted earnings per share is $2.03 per share, like that. Clean this up a bit so I can scroll down there a little bit more. You can see a little bit more. All right. You'll notice here that we've also got, get that tools out again. Total debt, $41 billion versus total cash of $153 billion. I don't like my companies to have any debt, but if they have a situation where we have debt that could be easily paid off because they have enough cash on hand to do so, that I don't mind. It's like having a debt-free company. So this is the main reason why you're seeing a negative number on the enterprise value, because they have so much cash on hand. And here we see that book value of $27.63 that I had marked on the chart earlier. It's where I got it from. Okay. Couple other items to note. Percent of stock held by insiders, 0.34%, pretty low. Percent held by institutions is 80%, like that. We also notice down here you've got a forward annual dividend yield 2.4%, and you can notice the payout ratio is only 24%. Only 24% of their earnings is going to take care of that or service that dividend. So it's not a real issue there of whether or not they're going to be able to continue to pay out that dividend, because they have plenty of money to burn through before they ever come into question there. If you've not been to our free website at PerfectStockAlert.com, it's right there. It's 100% free. All we ask in return, please refer a friend. See you next week. Please take a moment to review our disclaimer. The information provided herein is our opinion only. Under no circumstances do any statements here represent a recommendation to buy or sell securities or make any kind of an investment. You are responsible for your own due diligence. To summarize, we do not provide investment advice, nor do we make any claims or promises that any information here will lead to a profit, loss, or any other result. These videos are for educational purposes only.